Hey guys, welcome to Joy of the Trade. This is my Wednesday midweek observations. We spoke on Monday morning and I was warning you guys of a really high potential for a stretched bullish move. And that's exactly what we got. We closed Monday up over 7%, the biggest take that we've had in many days. And, you know, in normal times, it would have been the biggest move anyone's ever seen. So people that were coming to me last week and were saying, is this a good short for a stock that's down 35%, 40% in a straight line? I'm thinking to myself, oh my gosh, don't try this at home, kids, because it's like a rubber band. It gets stretched on the downside and then boom, it snaps back. So if you're caught in that snap, anyone that's ever traded from the short side, for as many years as I have, or traded for many, many years, it's been caught in one of those snapbacks. It's no fun. The pros, we don't get caught. We don't enter in those snapbacks before those snapbacks. We might be in a short and haven't captured our full profit. And then that snapback happens, but the pain is still so very real. So, be cautious, tread cautiously. This is a trader's tape. This is gonna hurt bears and bulls equally. It's gonna be indiscriminate in the amount of pain that it gives. Actually, the more one-sided you are with your flag firmly planted as a bear or a bull looking to be short or looking to be long only and investing from those sides, the more likely you're going to get destroyed in the next 12 months. You have to be a trader. You have to be tactical. And you have to fight with both hands. You have to know how to play the long side and the short side. But anyways, that's just my soapbox. I'm always going to tell you that. And that's why you should subscribe to Joy of the Trade, because that's what I do. I'm a trader and I trade these swings. I trade these waves. But I wanted to show you today. So we're kind of stretched still. We had a failed rally yesterday, but we're back at it today, bit again. There's a place that's dragging us down a lot, and that's Europe. Europe's kind of weak. We started selling off into the European close yesterday, and then the S&P continued to deluge the rest of the afternoon. But I'm not going to blame the Europeans. I just want to show you what I look at in terms of relative strength and understand why we've rallied the way we've rallied. So this right here is a spread chart year to date. Amazon and the SPY ETF, so the S&P 500. And look at this is in this year of destruction, just market neutral. So you have one long short position and one short position. You can do it through options. You could be long a call and long a put. There's a lot of more complicated option strategies to get the same expression. But regardless, just plain vanilla, long short is worth 26% right now in April 2020, you got 26% and you have no market position. So that is what I'm talking about. I'm talking about positions like that, where you don't care about the market. You don't know if the market's going to rip. You don't know if the market's going to crash. You don't care if it goes sideways. You just have the strength. And so if we're looking at what's rallying or what's strong or what's staying strong, it's the Netflix, it's the Amazon, it's the companies that were already world beating. They already set up because they have a shift. They have a money flow that's happening for them. And all that's happened through this stress is that money is seeking a nice home where growth will still continue intact. Because even though everything's come down, their share of the pie is increasing. So I have a event that I'm doing tomorrow where I talk about my money link, where I show how I find trades. I find that link. I find those scenarios where I can make money in all different types of weather, types of market environments. So that's at 1 o'clock tomorrow. Highly recommend you come on there. You might learn something new. You might, if you haven't decided to subscribe to Joy of the Trade yet, it might put you over the top. I'm thinking it will. I hope the trade I gave you last week for free in EST.And, which is up 15%, was another clue that I might actually know what I'm looking at here. So it's been fun. It's been real. It hasn't been too fun because I'm sitting here with the wife and the 3 kids, and I've been home learning. I'm a teacher for lots of periods of time too. So stay positive. We've got this. We're going to get through this. It's going to be money-making opportunities, but we have to trade. We have to be active. We have to be traders. So rest of the week, market could shoot a little bit longer. A lot of people are pissed off about it. I like when people are pissed off because they're like, how could this happen? Well, that's because you're pissed off. And there's a group of you that are pissed off, and your frustration is expressing itself in market prices. So pay attention to that. I think that there's a lid on it. I think that it's going to overstretch, but that's the tactics. I've been long, and I'm taking some longs off through this. Not fully. I'm not ready to be short yet, but you got to trade the waves. So I'll be back on Friday, and we'll see how we do. Actually, Friday is Good Friday, so I might take a flyer on that one. But tomorrow, Thursday, 1:00, be at my event where I'm going to show you the money link strategy that I use. Take it easy. LFG.